Welcome to the SNN Network Canada virtual event. I'm your host, Robert Kraft, and on behalf of SNN Network and our lead sponsor, Small Cap Discoveries, thank you all for joining us. I'd like to invite you to our next panel here today, which is titled Cross-Border Trading Process, Everything You Need to Know. Guiding us on this journey today, our moderator is Becky Popoff. She is the Vice President at B. Riley Securities. And with that, Becky, take it away.
Thank you, Robert. Hello, everybody. I'm Becky Popoff, and I'm a Vice President with B. Riley Securities Capital Markets Advisory Group. It is our pleasure to be sponsoring another fantastic event. I started the year off with SNN's premier virtual event, and I am so pleased to be wrapping 2021 with SNN and all of you. I'm so excited to be hosting today's panel. We've put together a terrific group of experts to speak about the cross-border trading process, as Robert said. Each of our panelists bring a very unique perspective given their respective roles and focus areas. And it's really our goal together to take you through the entire process from start to finish, covering all the steps involved in order to create a successful cross-border experience. So whether that be with your OTC sponsor, your transfer agent, DTC participant, corporate and securities compliance, or your IR representative, we have you covered. And if you're a Canadian issuer considering a US quotation and wondering what the benefits are, what's involved in the process and how to get started, this panel is definitely for you. So with that said, let's have our panelists introduce themselves. I'll start with Deborah Honig, founder and president of Adelaide Capital, Investor Relations.
Thanks, Becky. Appreciate the introduction. So Adelaide Capital is a full service IR firm. We are Canadian focused, but we do have about 20 or 30% of our network in the US. And that's an area that we've focused our efforts on growing our investor base and also helping our companies when they do a cross-border listing in terms of generating market awareness. Myself, I have about 15 years of capital markets experience, 4.5 years running Adelaide Capital, and about 10 years as institutional equity sales before that. I think that's a good intro. Thanks, Becky.
Okay, perfect. And now I'm going to jump over to Jenna Kaye, CEO and co-founder of Odyssey Trust. Jenna.
Thanks, Becky. I'm really excited to be here with a panel of all women today. This is so nice. As Becky said, I'm the CEO and co-founder of Odyssey Trust Company. We're a North American trust and transfer agent with offices across Canada and co-agents in the US and international. Odyssey is a company that is a challenger to some of the big box transfer agents. And we have a very dynamic presence with issuers that are dual listed. So in addition to being a transfer agent on both sides of the borders, we also offer DTC eligibility services and can really facilitate primarily Canadian issuers in getting more US exposure and US liquidity for their shareholders. So I'm thrilled to be here today and excited to talk about this very timely topic.
Yes, indeed. All right, now we will jump over to Judy McCall, founder and CEO, Blue Chip Corporate Services. Judy.
Hi, Becky. Thanks for having me. And like Jenna said, super excited to be here with a panel of all women. Just a little bit about myself. I'm currently a corporate secretary for a group of publicly traded companies here in Vancouver, BC, but I'm also the CEO and founder of Blue Chip Corporate Services. We offer and facilitate services to private and public issuers that are looking for cross-border trading and looking for dual quotation or DTC eligibility solely. A little bit about my background and experience. I was a corporate and securities paralegal for quite some time, so naturally that kind of navigated me into the intermediary position to assist issuers in all of the steps and engaging US counterparts like yourself to be able to make the process just smooth and as easy as possible. So I'm excited to be here and kind of explain more of my role and where hiring a facilitator like myself could assist the companies.
Perfect. I love it. Okay, so now our ultimate goal today is to collectively help you, the audience, understand how to establish secondary trading on OTC market. Specifically is what we're speaking to today. And for those that may be less familiar, OTC Markets Group's trading platform is an SEC registered alternative trading system and FINRA member broker dealer. The OTCQX is for established investor focused and US global companies and offers the best informed and most efficient trading. And it's for companies that meet higher financial standards. The OTCQB venture market offers early stage and developing companies the benefits of being publicly traded in the US with lower costs and complexity than a US exchange listing. So now all of us can really speak to why establishing secondary trading on the OTC is beneficial, but we also want to make sure everyone out there is well informed on who you should be working with to make your cross-border experience a full success. So I'd really like to kick it off by taking this conversation and really jumping around and asking questions to each of you. So we can really just see the full picture and how this process takes place and what needs to be done. So with that said, Judy, I'd love to start with you and really dive into the before and ask you, is it possible for a company who's not publicly listed in Canada to establish themselves on the OTC?
Yeah, definitely. I think, there's a lot of steps to preparation that a private issuer can take, leading them up to post IPO and being in a position to be able to file their 211, be readily available to, send in applications for DTC. And those would be one, like I mentioned kind of in my bio, just really hiring a person that is going to be responsible for building the relationships with the US counterparts, facilitating and mitigating between what is going to be collected, data that's going to be collected and put into their applications. I think also a huge part in the process pre-IPO is communication with your team, ensuring that, that the team understands what is going to be happening post IPO. There's a lot of small events that could trigger issues with timing with your DTC eligibility or with your OTC quotation, and making sure that everybody's kind of on that page. No new director being added or no trigger private placement happening. I also really strongly believe having a great transfer agent and supporting legal counsel to kind of walk a team through, understanding where they kind of fit in to help build the relationships with your US counterparts is important. So what I do at Blue Chip is I actually prepare a checklist for my private issuers, because I have been seeing a lot of movement in the private industry. And so I prepare a checklist just to ensure that they have a strong grasp on what their share capital is, their D&O information. Do they have all their constating documents in line? Do they have, a shareholder in specific to generate that share certificate that's going to need to be submitted to the DTC? So honestly, having somebody that's strong and familiar with the process, I think is the best step for a private issuer to be able to navigate through all of the steps and processes. So I mean, if there's anything in specific that I might have missed, let me know.
No, that was great. I really wanted to get this from the start to the end. So I think that's a great kind of segue over to Jenna, actually, to really touch on the transfer agent side of things. So, when issuers, Jenna, are considering trading in the US, do all transfer agents have the same requirements and process with dual quoted issuers?
Yeah, thanks, Becky. I think from a transfer agent side, what we always focus on is sort of 3 buckets that you should be asking your transfer agent when you're looking at a US listing. So the first one is process, and how does that work with them engaged as your transfer agent. One of the biggest questions is your transfer agent actually registered to be a DTC limited participant? Because if they are, they can process seamlessly cross-border. Whereas if you have a purely Canadian transfer agent, you may also need to engage a separate US transfer agent, which for some issuers is just a bit of a pain point because then you're dealing with two different companies who you then have to navigate through the process. So that's one question is, can they act seamlessly for you cross-border? The second is timing. So all issuers who want to list in the US want to list yesterday. And so what the questions you need to be asking are, what does a timeline look like? How can we ensure that we have the right people at the table, which I think we've spoken about before, and really getting concrete timelines for what the process will be from the transfer agent side. And a big part of that too is just responsiveness. So when you have a question, getting it answered the next day or the same day is really important, because what happens is you lose weeks sometimes by waiting for something like a TA attestation form, which should be something that's very simple to get back. We also, as transfer agent, another piece of that process is once you finalize your DTC eligibility, is getting you DTC fast. And that sometimes goes, I guess, undealt with until you realize that you need to tack it on. And in that case, you should be asking your transfer agent as soon as you get DTC eligibility to be also filing a DTC fast application, which can be approved the same day by DTC sometimes. And so that's critical. And so process is one, timing is one, and then cost is the other. And so there are also different costs with different transfer agents going through the process. One of the big questions to ask is, what do you require from a compliance or a legal opinion standpoint? And some transfer agents require an additional Canadian or US legal opinion, and some don't. And so for an issuer, they are cost sensitive about these projects sometimes. And so that's a key question to ask.
Okay, great. No, that's wonderful. And I think it just really is so helpful for all of our issuers out there to understand all of these points. And this is where I'll jump over to Deborah now. And I think all of us have seen over the past 12 months, more than, 450 Canadian listed companies have joined the QX or QB to increase liquidity, gain exposure to a new investor base, and access an active retail market. So Deborah, from your opinion, how, with these numbers spiking, how has the landscape changed over the course of the pandemic? And what do you think is the best way for a company to gain exposure in this current environment?
So I think, as we've all seen, the biggest shift was everything going virtual. So virtual webinars, virtual conferences, etc. That's one thing, but one aspect of that really has been the democratization of information and management access. So the individual retail investor now gets way more information about public companies and access to management than they ever have in the past. And this is a trend that I don't think is going away. Webinars, virtual conferences, I think we can all agree, no offense, Robert, love your event, but people are getting really sick of them and looking forward to getting back in person. But I think this whole virtual thing will continue on because it's really providing access to a group of investors that never had access to this way before. So at Adelaide Capital, we like this. We've been at the forefront of it. We've done hundreds of virtual events, and we've really tried to engage the individual retail investor. And really, we use social media to do that. So I don't have time to call up every single retail investor. I focus my time and efforts on pools of capital when I'm booking meetings and talking about stocks. But a great way to access individual retail is through social media, particularly Twitter. You've seen Reddit, Discord, all these other platforms emerge. But for me, maybe it's a personal preference. I find Twitter is where you find new investors. You can use LinkedIn to keep industry participants, your network, et cetera, up to date on company information. But I do find that Twitter is one of the biggest forums for finding new investors. So I think it's really important for companies to have an active social media campaign. And yeah, that's one way to access retail investors. I would say also there's like third-party marketers that you can use online. I think they call themselves finfluencers now, but essentially it's using third-party firms to kind of be digital newsletter writers for your stock. And I've found that's been effective at times. Social media strategies go through phases as well. Like we saw last year, people were really active on social, but it kind of dropped off leading into the summer. And so there's trends throughout the year in terms of social media use that you have to be aware of, and certain things will work for a while and then they won't. So you kind of have to be more fluid, I would say. And then also a digital strategy, putting dollars behind your social media and behind digital marketing campaigns, I think is a really good way to gain eyeballs in this environment. And then what else would I say has changed? I think that's pretty much it. I think right now we're seeing a shift back to in-person, like I mentioned, and I think companies should have a dual strategy where they are starting to do in-person events in a safe way, but also keeping up with the digital stuff because it is really getting a lot of eyeballs in aggregate. So I'd say those are the biggest changes.
That's great. No, it's really interesting to see the shift and how many more companies are truly looking to gain that US exposure out of Canada. So now I'm going to circle back to more of the technicalities in how to make this a success. So perhaps Jenna from Odyssey can chime in here about what does it mean, for those that don't know this, what does it mean to be DTC eligible, and why do issuers need it to make their cross trade a success?
Sure. I mean, yeah, great question. I'm sure this is the forefront question on everyone's mind when they're looking at the US. And so DTC is the Canadian, I guess, equivalent, or the US equivalent of CDS in Canada. It's critical that you have DTC eligibility when you're looking at a dual listing. I think we all agree having an OTC listing or a NASDAQ listing without DTC eligibility is they do go hand in hand. Mm-hmm. And then even further to that, now that you can be DTC fast, it's also adding that fast capability so that your stock can be traded in DRS or direct registration format versus physical certificates. And so DTC eligibility is critical, I think, for anyone who's taking their venture into the US very seriously and hoping to get as much US interest as they can. From our standpoint, the biggest thing is bringing in the right players. So yes, you want to get DTC eligibility. You may need to have US legal involved as part of that process. You want to have, like Judy said, that checklist when you're getting ready to go through this process so that you can actually make sure that you're covering all your bases and hold other people accountable for the process as well. So I love that Judy mentioned that, and having that intro call that has all the right people at the table. Which for us also includes sponsors like B. Riley. We work with you guys all the time, and having people that take initiative to get things done, understand your timeline and the need to get this done quickly. From a transfer agent side, the perspective is very easy. We tend to be sort of the simplest box to check as part of your DTC eligibility or your US listing process. And so with us, you just need to have an agent that's SEC registered and that's a US transfer agent engaged, which if you're a Canadian issuer for us, we actually don't need to do anything else to be engaged in this role. We just add it into your existing contract that you have, and we will be the one that completes your TA attestation form and also your DTC fast application. So those are the two steps from our side. But in addition to that, like I said, being one of the players that's at the table when you get ready to launch and be able to corral everyone along the way as the DTC eligibility process goes through its various components.
Perfect. Now, Judy, I know you work with many of your clients in the DTC process as well. What do you think the biggest hurdle is in becoming DTC eligible, and how can issuers overcome this prior to even getting started?
Well, right back to what Jenna and I think both keep saying is not being prepared with the right documentation that needs to support the application process with the eligibility. A lot of people aren't coming into this understanding that they really have to have a strong investor that's ready to provide a copy of their share certificate to submit to the DTC that later will have to be redeposited through the system, and there's rules around that. It can't be an insider, it can't be a control person, like in any form. So I think there's a lot of time issues that are faced and challenges with issuers because they're just not prepared with the right documentation to submit. Other than that, I think if you hire a good facilitator, you can really be in a strong position to be ready to clear within 4 to 6 weeks. As Jenna also mentioned, choosing the right stakeholders and team around you, having the right transfer agents, having the right sponsors, you know, that you can build a team that really is efficient and promotes movement in a strong, you know, fast pace to push it a line at the DTC. And yeah, so that's kind of my strategy as internally as a corporate secretary, because I do get the luxury of sitting on the end of being internally responsible for issuers that I act upon, but then also being able to externally provide clients with the service. So strategizing yourself with the right team, I think helps curb some of those timing issues that the issuer really faces that can impede on their eligibility.
Absolutely. Thank you. So as service providers, we all work very hard to make sure you know where each process begins and ends. And so before I kind of jump into what B. Riley does in this process, I have a two-part question for you, Deborah, in terms of before and after. So before a company is listed, and I'll get to the after a little bit later in this panel, should a company be coming up with some type of IR plan before they establish their dual quotation in the US? And do you think that's important that issuers engage with you prior to even beginning that process?
Yeah, I think you should always be building awareness. It really is a global marketplace now. But yeah, if you're looking at doing a US listing, you want to start creating awareness. I mean, getting a US listing is great, but if you have no volume down there, what's it really worth, right? So you have to make sure that you are accessing US investors. And I think working alongside a Canadian IR firm, we have relationships in the US, but it's a huge market. We don't cover the full country. So we have partners that we like to work with that we know are reliable, that can get meetings, that can get exposure into markets that we don't have exposure to. I think that's really important. I think as long as the companies started the process and US investors can kind of look at it and say, we're going to be able to buy this, or maybe they have their DTC eligibility already, but not their OTC listing, it makes it a bit easier for US investors to buy. But I certainly wouldn't recommend that a company go and spend a lot of money marketing in the US unless they're on their path to getting listed. But yeah, I mean, creating a groundwork for sure. I hope that answers your question.
No, absolutely. And that kind of wanted that I wanted to ask you that now as I lead into, you know, the overall process, so I can ask you the after once I complete my overview as sponsor. So B. Riley is a qualified OTC sponsor. And, you know, as I was mentioning, it's our goal together today to really walk you through who you should be working with and how to make that happen. But I'll give you some perspective on how the process works from the sponsor perspective. So OTC markets requires that all issuers work with a qualified OTC sponsor in order to establish their quotation. And as a qualified sponsor, we work with the issuer from start to finish in order to establish their official quotation. And now there's several steps involved in obtaining a US ticker. Generally, that process starts with the FINRA 15C211, which Judy mentioned earlier. And this is the market making application. So B. Riley, we're a full service investment bank. We act as sponsor, but we also have the ability to file this market making application, which makes it really nice for our clients because everything really stays under one roof with me. And I'm really leading the process each step of the way there. But for those that aren't familiar, Rule 15C211 is how it regulates how and when broker dealers can publish quotes. And once a 211 application clears, a company is issued a ticker and immediately quoted on the pink market. And from there, we finalize the quotation process with OTC markets to ensure the issuer is quoted on the appropriate tier, with providing the sponsor letter as the final step in the application process. And the whole process really takes about 2 to 3 months to complete from start to finish. And throughout, we really serve as the liaison between the company and FINRA and OTC markets. And again, with everybody on this panel today. So now, as a sponsor, one of my main goals, as I've been saying that throughout this conversation, is making sure my clients are really in good hands in every aspect of the process, which is why you have this select group of ladies here together today. So with that overview of really start to finish, I wanted to shoot this back over to Judy to really talk about the after. So after I work with the issuer to get that upgrade to the QB or QX, what happens post-graduation? And, you know, what are a few annual or disclosure requirements an issuer is responsible to maintain to keep their QB or QX status in good standing?
That's a really, really good question. And I think, you know, so many issuers are just hyped about getting the clearance of the DTC and getting that quotation on the US market that they kind of forget about all the compliance that really, you know, leads up for the issuer on an annual basis. Now, luckily, I can say that a lot of the compliance is controlled and managed through your home listing. So whether you're listed on, you know, the TSX Venture, CSE, and now NEO, you know, it really, those main exchanges are heading your compliance division. For OTC, once you have your IQ and your portal, you would go in and just like you would in Canada, you would upload your, you know, all of your financial reporting documents on an interim basis and follow up with that on an annual. And there's a certification that the issuer will get, you know, familiar with in the application process to the OTC, which I kind of like the regulatory, their compliance department really is assertive in making sure that the client understand what needs to go on that document. And that kind of just gives the OTC an understanding of where your share capital is sitting versus the year before, if there's any changes in directors, officers, and that needs to be filed in the portal as well. And other than that, you know, just maintaining your news disclosure, which is usually disseminated through your home listing, gets picked up on the, you know, disclosure down in the US as well. And then just updating your profile, making sure that your profile is constantly up to date with the correct directors and officers, your share structure, and, you know, just where your project's at, like where your assets are sitting, you know, if you're generating revenue, like where your revenue is sitting, and it's all pretty straightforward. So I think the actual application and clearance process is probably the most you know, stressful for the issuer. And after you're listed, it's quite easy. And, you know, every public issuer has a corporate secretary responsible for compliance. And, you know, I'm strong, firm believer that they can handle the little bit of compliance requirements that are left after.
Absolutely.
And
that's super helpful.
Yeah, and if not, you will definitely get notified by
that's what I was going to say next. What if they forget? What happens?
You know, you'll get to know your regulators quite well, like you do in your Canadian exchanges, and they'll give you a nudge. So you basically, they're fair, like little warning. I think that they're very receptive and understanding to the fact that foreign issuers might not be completely aware or reminded that they have to make these filings once, you know, if you're IPOing, you'll start, and if your dual quotation is at the time of your IPO, you'll kind of understand that all at the same time. But if you're an existing issuer, you might forget that you have to file your financials, you know, on a total different exchange, but they're really helpful. So there's nothing for the issuer to worry about after that. Just make sure you get it in as quickly as possible.
Perfect. Absolutely. So now that we have the perspective on what needs to be done once they're trading, I think this really all circles back to Deborah and just the aftermarket support once a company is officially trading. So my question for you, Deborah, is what do you think is an effective marketing campaign for a US dual quoted company And what would that involve? And why is it so important once they're officially trading to get their story out there?
Well, I think it's important for a number of reasons. You want to see volume on the exchange. And if you're now dual listed, your volume is going to be split through the exchanges. At least a little bit will go down south initially. So you want to make sure that you're increasing your volume so you have good liquidity, which is always a challenge for small cap companies. I would say that the most effective strategy would be two-pronged. We talked a lot about social media, digital marketing. I think that's really important. So I would say you want to make sure that you're targeting audiences in the US through your digital strategy, putting dollars behind it, making sure that you're accessing those audiences. But then I think you really have to access pools of capital. That's how you really get a strong, solid shareholder base. And so I think you have to find partner firms that can access different areas. What we've noticed about the other IR firms that we use in the US is that they're regional. So there's some that are really strong on the East Coast, some that are really strong on the West Coast. So target maybe the areas that you want to hit, where you think your story will resonate the most, and put money into marketing efforts in those regions. And I would say a lot of people ignore the smaller areas, and that's where you can find some really good investors that are not over marketed. So some of the smaller communities, they do have a lot of money and they have people that will invest. So I would say, yeah, two-pronged: digital, social media strategy, and then in person or virtual, I guess, for now, hopefully in person down the road. So through targeted road shows, targeting different geographies, well-selected conferences, and what else did I have right down? Yeah, I think that's about it. I mean, that's the same strategy that we employ in Canada, really, is like hit up the two groups of investors, the smaller ones that'll support your stock, and then the bigger ones that'll, buy in larger quantities and be long-term shareholders. I would say it's pretty much the same. You just have to use a variety of different trusted partners down south. And then market making is important too, to get the liquidity going, which I'm sure you can talk a bit more about, Becky.
Absolutely. And before we jump to the next topic, I think just adding on to that, when you were talking about the two different buckets of investors, I think that also brings me to, do you think there's a big difference in marketing to the US investors versus the Canadian investors throughout this process?
Yeah, there's some significant differences. I would say, first off, the US market's massive, right? That's the golden goose. That's probably why companies are looking to get a US listing, is to access this larger pool of capital. One thing I will say is the US markets tend to be a little bit more conservative in a lot of ways. And the companies are larger. So if you're a small cap in Canada, you're a microcap or a nano cap in the US, right? So it's going to be even harder for you to get investor attention because you're going to be viewed as speculative and listed on a foreign exchange, right? So those are obstacles that you have to think about from a US investor perspective. So I would say that on average, risk tolerance in the US is a lot lower. So you'll get less of the speculative kind of investors, which is a challenge. So you have to kind of find those guys, which I think for some of the larger sectors like mining, oil and gas, there's a defined investment group in the US that invests in those from an institutional perspective. And I would say those investors are not very different from the Canadian institutional investors that invest in the same sectors. They look at the same things, they ask the same questions. They know, like, they're kind of just the same players, right? But if you're trying to access retail, I think for the natural resource sectors, you're going to have a learning curve that you're going to have to educate investors. So if you're a mining company or junior mining company, when you're talking to US retail, I think you're going to have to explain things like what a PEA is, what a PFS is, and sort of the timeline of exploration to production. For the institutional guys, certainly not, but I think more for the retail guys, that definitely is part of the conversation. Whereas other sectors outside of natural resources, the US has broader coverage and broader depth in those sectors. So you may not have as much of a learning curve. Like biotech in the US is a pretty established sector, whereas in Canada, there's not as much biotech. So you might have more education in Canada than you will for the US retail investors you'll be meeting in the States. So I guess it's really sector dependent.
Right.
And then you also have the challenges If you're dual listed and you want to do a private placement, a lot of your US potential investors are going to struggle with that because of legend and hold period. But on the flip side, there's alternatives available to dual listed companies like ATMs, cross-border financings, et cetera. So kind of, I guess there's choices that you have to make down like when you're going down a financing path. But yeah, I would say like, yes, differences that I covered, but my view is people ask me the same question, like US versus Canada, retail versus institutional. And I kind of go back to marketing a story is about creating a pitch and giving the investor like 3 to 5 reasons that they should own a stock. And this strategy works regardless of the type of investor, whether they're institutional, retail, US, foreign, it doesn't matter. People want sound bites. So if you can give them 3 to 5 reasons to own your story, obviously the more sophisticated investors will dig deeper, but people that invest in stocks like to talk about stocks. So the easier you make it for them to talk about your story, whether it's online, on their own social media, with their investor buddies or whoever it is, the easier it is for them to understand it and pitch it, the more you're going to get traction with your story. So I'd say, yes, there's differences in all the different kinds of investors and US versus Canada, but what it comes down to in marketing a story is the pitch. If you can get it out in an elevator pitch, like 30 to 60 seconds, I think that's the most effective marketing strategy, regardless of who you're talking to, because you'll just get the repetition effect. People talk about what they can understand and wrap their head around, and that's what they'll buy too. So I don't know. Take it as, yes, there's differences, but I think the common theme is just having a really good like marketing strategy.
Absolutely. No, and that makes total sense, which I think Jenna and Judy both said is just having your checklist. And it sounds like we all kind of have that same theme. It's just making sure that the issuer is organized with everything that they need to do. So, I kind of wanted to wrap up the panel and ask a question for all of our panelists and kind of just take the conversation from there. But my question is, what would you say in your respective role is the number one question you get from issuers and or the biggest challenge they have to overcome? And, maybe you could speak to that. And yeah, how about I'll start with you, Judy?
I get 2. So timing is massive. How long is it going to take for us to, have a face on the OTC markets, whether that's pink, when you're just filing the 211 or graduating to the QB or QX. So timing is really, really big for the issuer. And like Jenna said, everybody wants to be on there and eligible the day before.
Yeah.
And then secondly, cost. How much is it going to cost the issuer to make sure that the whole process has gone seamless, and and there's a lot of competition out there now, as there wasn't, I would say, back when I would have started doing this in 2014, it was very limited to who you could use in that eligibility and dual quotation process. And now there's quite a bit of competitors. And so the issuer really needs to just be resourceful and ask around and utilize maybe suggestions from other issuers that have taken the process. And yeah, just timing and cost, two biggest concerns. And I think for all of us as well too, in probably everybody's capacity, those 2 questions arise quite a bit.
Absolutely. I get those same questions as well. I'm sure we all do, but I think it's just important to just be as transparent, at least, the way I speak to my clients is just making sure I'm as transparent as possible on how the process works. And obviously the ultimate goal is getting them to that appropriate tier on the OTC and making it efficient and as streamlined as possible. How about you, Jenna? What would you say?
Yeah, I guess leveraging one of Deborah's points on like the 3 sound bites, the 5 sound bites. When they come to us, we want to give them or leave them with 3 to 5 things that they need to know about this process. And so they can, and then come back to what Judy had said, about like have this checklist, a short, brief understanding of what's ahead of them and they can start to bring together the components, or we can start to help them with that. But really, I would say from an overview, it's like we want to see the big picture of what we need here, and know who's at the table. And then I would definitely say that the same points that Judy made. What's the time? What's the cost? Are the two major things that we hear. But a thing that we found to be very successful is having a really tight overview of what the plan looks like. And so they leave that conversation feeling very comfortable with what's coming up next, and not like, okay, now I have to, gather all these people together, and I'm after a project that I have to manage. Whereas we want to leave them with that project management framework and be a part of it that can help them hopefully get things done simple, fast, and easy, and get them listed as soon as possible.
Always simple, fast, and easy. It's what we want every time. How about you, Deborah?
I think we covered a lot of the questions that I get, which was mostly around differences in investors, how to access them, how to increase liquidity. But I kind of want to take your question in a different direction. I think the biggest challenge that issuers face, even if they're listed in Canada, but particularly if they're dual listed, is the amount of inbound emails they get for services. And this is like, it drives me crazy because we manage a bunch of inboxes for public companies, right? So I probably on average get 30 to 40 marketing emails a day from firms offering a variety of IR third-party related services. And sure, I'm a third-party IR related service, right? So I'm talking out both sides of my mouth, but we don't actually market. We don't need to market because all our business comes through like our network, word of mouth, other clients that we work with. And that's a great spot to be in. And maybe at some point we'll have to market. But sometimes like these emails, they just come again and again and again and again, offering all these services. So if you're a new issuer in a different market and you're getting all these inbounds, I would imagine that it's really difficult to figure out who you're supposed to use, who does what, what's this service versus this service, how many of these do I need? And I think it's really an opaque thing for them to try and figure out. So what I would say is leverage the people that you do know. Like I'm sure Becky would be able to point companies in the right direction in terms of what they need and what they don't need. And just really rely on maybe the networks you have with other issuers to ask them about other services before you sign up for them. Because I've signed up for some terrible services and had companies pay for stuff that I'm like, oh my God, this is awful. We're getting no benefit, and you can't get out of the contracts for like a year. So I would say just make sure you're doing your due diligence on people like me, because a lot of the contracts they won't let you out of, and you're stuck paying these fees and getting no benefit. So I'd say that's the biggest challenge in entering a new market, is just figuring out who you can trust in terms of the service providers.
Which is why I brought all of us here today, because this is such a great group. And I love working with each of you. And I think we all have, very similar perspective on how the process works, and just making sure our clients are happy. And so that was really the goal for me today, is to have all of us together to really wrap this up for everyone out there. So I think that really leaves us in a good place. And I just really like to thank everyone for joining us today. And, we all work really hard for our issuers to achieve a successful transition into the US market in different ways. So if we can be of any help to you, please don't hesitate to reach out. There will be a contact slide right after we wrap up. So I just want to say thank you. And ladies, it was such a pleasure to be speaking with you today. And Robert, thanks again for having us. It was great.
Thank you all so much for sharing your insights today. I learned a lot today, and I hope everybody listening did as well. So thank you all for joining us. Have a great end of the year. Happy holidays, and look forward to connecting soon.
Absolutely. Thank you.